All right, then moving on to the big headline this morning. Federal Reserve holds rates steady in the 4.25 to 4.5% range. Now, the outcome, which was largely expected, is on expected lines. However, the FOMC flagged unemployment and inflation risks in the near term, as I pointed out earlier. A balancing act for the central bank as uncertainty continues to mount on the tariff and trade front, even as Chair Jerome Powell highlighted that the U.S. economy is in fact showing signs of resilience at this juncture. Now, Powell also shot down the potential of any preemptive rate cuts amid tariff-led inflation concerns. He said, and I quote, "Don't think we are in a hurry to adjust rates," end quote. Additionally, he also said that the ongoing talks with several trading partners could change the picture materially. Let's go across and listen into that excerpt.
Compared with the projections made in December, real GDP growth is stronger, the unemployment rate is lower, and inflation is slightly higher. As I noted earlier, today's decision to raise the federal funds rate is another step in the process of gradually scaling back monetary policy accommodation as the economic expansion continues. This gradual process has been underway for more than 2 years, and it has served and should continue to serve the economy well. What came out of that, it was first that there's no thought, I think, that changes in trade policy should have any effect on the current outlook. Our current framework for implementing monetary policy is working very well. We have excellent control over rates, and it's working, and it's, as you described it accurately, we haven't made a decision to keep that as our longer run framework.
All right, then that's a word coming in from Fed top boss. Moving on, then China's central bank and financial regulators announced sweeping policy steps, including interest rate cuts, as Beijing ramps up efforts to bolster growth amid mounting trade worries. In fact, the PBOC is going to be cutting the 7-day reverse repurchase rates by 10 basis points to 1.4% from 1.5%. Now, the lower policy rates will come into effect from today, while the RRR relaxation will be effective May 15. The officials, in fact, also announced measures to support financing for several key sectors, including the likes of technology and real estate, along with establishing of a 500 billion yuan relending tool as well. Not just that, the Chinese central bank, in fact, also reducing the mortgage rates. That is something that you're seeing under the Housing Provident Fund by 25 basis points. Meanwhile, rates on 5-year loans for the first-time home buyers will also be trimmed to 2.6% from 2.85%. So that's the update coming in as far as China's macro picture is concerned.
Absolutely. That's the update on China's economy. Meanwhile, all eyes will be on the meeting between U.S. and Chinese officials in Switzerland. U.S. Treasury Secretary Scott Bessent slated to meet his Chinese counterpart, while the Trump administration is considering exempting car seats, baby strollers, cribs and other essential items for transporting children from tariffs on China that are up to 145%. China has said that they will be entering the talks firmly opposed to U.S. Tariff hikes. They're also willing to participate in a dialogue based on equality, respect and mutual benefit. Trump, in fact, also has flatly answered no when asked at the White House if he was open to pulling back on the steep import duties that he's imposed to get China to the negotiating table. Now, apart from that, Trump's commitment to his tariff comes 3 days before U.S. Treasury Secretary is scheduled to meet his Chinese counterpart in Switzerland to discuss the trade and economic issues.
Moving on, shifting focus to geopolitics, then amid escalating tensions between India and Pakistan, U.S. President Donald Trump said that if he could do anything to help, I will be there, and wants the escalating conflict between the two countries to stop. Earlier, he also said that he hopes that the hostilities will end very quickly. Let's go across and listen in to what he then had to say.
I know both very well, and I want to see them work it out. I want to see them stop. And hopefully they can stop now. They've gone tit for tat, so hopefully they can stop now. But I know both. We get along with both countries very well, good relationships with both, and I want to see it stop. And if I can do anything to help, I will be there.
If you like this video, then like, share and subscribe to ET Now.